How to trade in a bear market. Most people understand stock trading in a very simple way. You buy something at a low price, it goes higher, and now it's worth more, and you can sell it or keep it, and that's how people think about making money in the market. When the market starts dropping, a lot of people assume there's no opportunity because they don't understand how you can profit when prices fall. And the truth is, there are tools in the stock market that allow you to do exactly that, and the two main ones that traders use are options and futures. And those words tend to scare beginners, but they really shouldn't, because being afraid of them just keeps you from understanding how market opportunities actually work. The idea of making money off something dropping sounds complicated, like you'd need to be some kind of financial expert to understand it, but that's not true, because you've probably already heard of shorting stocks, which is one way to profit in a falling market. The basic idea of shorting stocks is that you borrow shares from someone who already owns them, you sell them right away, then if the price drops, you buy them back at the lower price and return them to the original owner, keeping the difference. So for example, if you borrow 100 shares of a stock priced at $100, you sell them and collect 10,000. Then if the stock drops to $50, you buy those same 100 shares back for 5,000, return them to the original owner, and keep the $5,000 difference as profit. That's shorting. But it can be more complicated to access and often requires more capital, and not a lot of people get involved in that. For most everyday traders, especially beginners, there are easier ways to participate in a falling market. And that's where futures comes in. With futures, you don't need to borrow shares or go through that whole process. You can simply sign up for a thing called a prop firm, and this video right here explains it very well. With futures, you take a position based on whether you think something will go up or down. For example, if you believe the market, like the S&P 500, is going to drop, you can place a trade that profits if it falls. If it drops, you make money, and if it rises instead, you lose. It's very direct. Futures essentially amplify the impact of your money and allow you to trade in both directions without needing a large amount of capital, especially if you go through prop firms, which give people access to trading with smaller amounts of money. Options are very similar in the sense that they allow you to trade in both directions and amplify the impact of your money. The main difference is that options give you more choices because you can apply them to specific stocks instead of just broader markets like futures, but are actually more complicated than futures. So if you feel confident that a particular stock is likely to drop, you can use options to position yourself for that move and profit if it happens. The simplest, useful way to think about both futures and options is that they are tools that allow you to trade up or down and increase the impact of your capital, which means there's higher risk and higher reward compared to simply buying shares. So if you want to trade during a bear market, what you're really doing is learning how to profit from drops instead of rises. That can involve shorting, using options, or trading futures. Shorting is usually the hardest to get into, options are somewhat easier, and futures are often the most straightforward for beginners once they understand how to access them. Now, if your goal is trades that last days, you're going to require more capital and you'll need to learn how to open a brokerage account. But if your goal is short, small pattern trades where you're in and out in about 30 seconds to a minute or two, that's what we teach in 20-Minute Trader. We've taught over 500,000 people how to do this. And inside the 20-Minute Trader Club, we have mentors ready to walk people through everything from setting up charts to understanding how to execute trades, even if someone has no background, no experience, and no technical knowledge. We hold your hand through it, and we lay out how the risk and reward possibilities and probabilities work. That's what we do inside the 20-Minute Trader Club. We usually run a free web class that walks through how all of this works step by step and answers questions live. If we're currently offering that web class, you'll find the link in the description below. Otherwise, don't forget to like and subscribe. It helps this kind of simple trading education get out to more people. And I'm going to keep making these videos to answer as many questions about trading as I can. I will see you in the next video.